Hey there, Lincoln here from bullacademy.org. Today let's talk about Robinhood and demystifying payment for order flow. So as you may know, Robinhood has been getting lots of flack because of their actions with the GameStop era, where they chose to stop customers from buying GameStop shares as well as AMC and other meme stocks. And now, because of that and many other actions that they've taken recently, they're getting lots of questions about how they make money, and customers want to know, hey, do you sell us out to market makers when you fulfill our orders? And Robinhood wants to make it very clear that, hey, no, this is how we make our money, and we actually are saving our customers money over the traditional commissions that you used to have to pay to buy or sell stocks on the stock market to companies like Charles Schwab and TD Ameritrade and Fidelity and all of those other guys who used to charge $10, $30 per share per trade. And now Robinhood is saying, hey, we changed the industry so that customers don't have to pay to make those trades. And this is how we make our money doing that. And they wrote this article. Their representative from Robinhood wrote this article. His name is Jem Storot, and he's laying out exactly how Robinhood makes money from payment for order flow. And he wants us to understand that it's actually better for customers of the platform. Of course, I'm a big fan of Robinhood because of all that they have done for the traditional retail investor and making it easier for anyone to go out there and invest their money that they can afford, right? 10 to 15% of your income every month consistently, and making it easier for all of us to build wealth, long-lasting, sustainable wealth. And that's why I'm a big fan of Robinhood. But there are other brokerages out there that do the same thing as Robinhood. It's just that Robinhood is the biggest, so they're getting most of the attention in this whole debacle that's going on with GameStop and other meme stocks driven by Wall Street bets. So again, Robinhood wrote a very good article here. I've gone ahead and annotated it to point out the most important parts, good or bad, so that we can understand exactly what they're saying. And I'm going to walk you through this article today so that we can all be clearer on how Robinhood works and make their money. And of course, I've done a previous video on exactly how much money Robinhood makes from this system, from this payment for order flow, and how our orders are fulfilled in this system. So if you haven't seen that video, go check it out. It's about how Robinhood makes their about $400 million a year through this system. So we're going to jump into this video. But before we get to that, if you enjoy it, go ahead and like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on Robinhood, Webull, and other platforms such as Charles Schwab and TD Ameritrade, and which one you're using, and if you're going to leave Robinhood. And if you're not, let me know why you're staying on Robinhood. I know lots of people want to say that they're leaving Robinhood, but I don't see any reason to do that because all these other platforms do the exact same thing. It's just that people don't understand how all of this works, so they think, oh, it's just Robinhood, but no, they all do it. So in this article, we're going to understand exactly how it works. And before we get to it, if you want to support the channel financially, help us continue to make these videos and provide educational material for all of us out here to learn how to invest and build long-lasting sustainable wealth, then join us over at patreon.bullacademy.org. You'll get more access to me, get direct access to your investment questions, and you'll get to join our Discord channel where we discuss the stock market in real time every day and share news, articles, rumors, and new investment ideas so that we can all make our own decisions and do our own research and then collaborate to make the best decisions on the stock market and build wealth together. So if you're interested in all of that, then join us over at patreon.bullacademy.org. There's about 100 of us right now in our Discord channel, so we would love to have you. We've gotten early on CCIV, SBE, ChargePoint, and IPOE, and Open Door, IPOB, and so many others. So that's the value of the community, and I would love to have more people over there so that we can have more perspectives and make better decisions together. So now that we have that covered, let's jump into this video. So as I said, this article is called Demystifying Payment for Order Flow by Jem Storot. Hope I'm saying his name right, but it was published on March 4th, 2021. It's a 3-minute read, so it should be pretty quick. And of course, I'm a slower reader, so bear with me. I want to make sure I pronounce all these words correctly so that you understand exactly what's going on here. So we have here, Jem says, it's been more than a year since major brokers in the US went to zero commission following the model Robinhood pioneered. Now with retail investing surging, more people have been asking questions about how brokerages make money. Like other brokerages, one of the ways that Robinhood makes money is through what is called payment for order flow, or rebates from market makers. Unfortunately, there is a lot of misinformation out there, so I wanted to share some light on the facts and how this practice benefits customers. First, some background on payment for order flow. When you buy or sell stocks, ETFs, and options through your brokerage account, we send your orders to market makers who execute them. To compete with exchanges, market makers offer us rebates. Market makers typically give you better prices than exchanges. So what he's talking about here is that when we, the customers, go out there and we want to buy or sell a stock, Robinhood takes that order that we give them and gives it to these people called market makers. They are the ones that keep the market flowing, right? They buy a bunch of stocks, and when you want to buy it, you buy it from them. And if you want to sell stocks, you sell it to them. So they are the ones that are interfacing with Robinhood and taking our orders and passing it on to the exchanges. And those market makers pay Robinhood for that flow, that order flow, because they, the market makers, make money when they forward those sales to the exchanges. And the exchanges don't pay Robinhood as much as the market makers. So that's what they're saying here. Robinhood makes more money from the market makers, not the exchanges. So that's good for the bottom line. And we'll see later how it helps us, the customers. Jem goes on to say, for stocks, our clearing broker, Robinhood Securities, earns a fixed percentage of the bid-ask spread at the time your trade is executed. All market makers we route to pay us at the same rate for equities, ETFs, and options. So what Jem is saying here is that of all the market makers that they do business with, they all pay them the same rate. So no market maker is paying them more or less for any of these trades than the other market makers, which is important because there's no favors between their market makers. They're all paying the same rates across these ETFs, options, and equities. So Jem goes on to say, that means there's no incentive for us to route your order to any specific market maker based on payment we receive. In fact, our routing system incentivizes the market makers we have relationships with to compete for order flow by giving you a better price than the one you were quoted at the time your order was placed. This algorithm prioritizes sending your order to a market maker that's likely to give you the best execution based on historical performance. So what Robinhood is saying here is very important because this is the value of the market makers competing for order flow with Robinhood, right? All of them, Robinhood's market maker relationships, are going to compete by offering us the best execution price for our buys and sells. So we, the buyers of stocks, want the lowest price. And when we're selling the stock, we want the highest price. We want to sell for the highest amount that we can get. So Robinhood is saying here that when they send an order, when they decide who to send the order to, they're going to pick the market maker who's going to give us the best price, right? If that's buy, it needs to be the lowest price. If that's sell, it needs to be the highest price. And that's how their algorithm chooses which market makers to send our orders to. And that's very important for us. So Jem goes on to say that a common misconception is that payment for order flow is a black box. In reality, Robinhood, like other brokers that route equity and options orders, is required to publish disclosures each quarter regarding execution and routing practices that include information about the rebates we receive, the market makers we route to, and the percentage of orders that we route to each of them. So they have a link here to these disclosures, and it's actually very informative. Like they say, they have this is 9 pages of all the information that we have to know about how these payment for order flows took place in the 4th quarter of 2020, which was the very last quarter that was reported. So it shows us here all the market makers: Citadel, G1X, Wolverine. So Citadel was the one that was in the news during the GameStop Sega. People thought that, hey, Citadel made Robinhood shut down trading of GameStop because they are one of the market makers for Robinhood. But that is not true. Robinhood is a completely independent company. Sure, they have investors, and Citadel is one of their market makers. But again, they don't decide which market maker to choose to based on favors. They decided on how much value they can provide to their customers, us, right? So that's good. And they provide a very nice breakdown here. And if you want the links down below in the description of this video, so you can go check that out yourself. And I've broken down in the past how much money Robinhood makes from all these guys. So you should go watch that video on how Robinhood makes their money, because it's very insightful. Let's move on to the next paragraph. Jem goes on to say, for example, we earn an average of $0.0023 per equity share traded in the fourth quarter of 2020. That's 0.2 of a penny for every share you buy or sell. So they're saying here, hey, we don't really make that much from trades, right? They make their money from volume. The more orders that they send, the more money that they make on scale. Their whole business model is based on scale. The bigger they grow, the more orders they can send, the more money they can actually make to make their business viable. But from just the individual, me and you, they don't make that much money from each of us. And they've said in the past that most of their customers, most of their users are long-term investors, which means they don't make trades often. They're not day traders or swing traders. They just buy and they hold. So that doesn't really bode too well for this model. But because they have so many millions of users, they can afford to continue this business. And hopefully they can get more users if we want to keep this business going. So Jem goes on to say, Robinhood has always stood for the little guy. Many of our customers are getting started with less, which often means they're trading a small number of shares. The vast majority of Robinhood orders are under 100 shares. That means that at $0.0023 times 100 shares, on the vast majority of orders, we earn less than 23 cents per order on average. Believe it or not, it wasn't that long ago that paying for a trade looked very different and more expensive. For years before Robinhood's founding, brokerages earned commission in addition to earning payment for order flow every time you traded with them. Robinhood changed the industry and pioneered the commission-free model. Others then followed. So Jem this is the dagger right here in all of this debate. Jem is making a very good point that I didn't even realize when I initially read this article. He's saying that back in the day, Charles Schwab, Fidelity, TD Ameritrade, all those big guys from the past, the brokerages, the traditional brokerages, they used to charge you dollars, right? $10 per trade, and they made money on payment for order flow. Robinhood said, hey, we don't want to charge our customers to make trades. We don't want to charge commissions. We're going to get rid of that $10 per trade. We're just going to keep the payment for order flow and make that business work at scale. We're going to get millions and millions of customers by democratizing, investing, and we're going to make our business work on that principle. More little guys investing means that we can make our business run on payment for order flow, and there's, of course, other products such as margin loans and options and money management. So Robinhood said no more of commissions, and because it went so well for them, everyone else followed. Charles Schwab got rid of their commissions. Fidelity, TD Ameritrade, they all got rid of it. Thanks to Robinhood. And now we can trade without being charged $10, $13 per trade, which is amazing. So this paragraph right here is the main point to take away from this article. Jem said they used to make commissions. They earned commissions and payment for order flow back in the day. And we came in and say, hey, enough of that. No more of that. So let's keep going. Jem says, I've worked in this industry for more than 2 decades, and it's been incredible to watch this transformation unfold. To illustrate how far we've come, here's a mock-up commission card including real numbers from a major retail broker in 1993. So this mock-up shows us a real trade. Wow, look at this. $39 per trade commission rate. You used to have to pay $40 just to make a trade. Imagine how much of a barrier psychologically that would place on you when you're trying to make a trade to either improve or maintain your portfolio. If you have to pay $40 per trade and you only make $7.25 per hour minimum wage, you're not making that trade. You're not buying. You're not investing because you can afford to. You literally cannot afford to. If you work 8 hours in a day, what's 8 times 7? 8 times 7 is $56. You want to make one trade for $40? What's 40 divided by 56? Yeah. 71% of your income in a single day would go to making that one trade. So yeah, Robinhood really changed the game. And of course, that's from 1993. It's been a long time since then, but the numbers were not much better recently, before Robinhood came out. So to anyone saying that Robinhood is the villain here, or Weibo's the villain here, look at this card and tell me how many people in your life that you know could afford to pay $40 to make a trade, to invest. Can you think of anyone? Where I come from, my mom makes like $10 per hour. If she makes $80 a day, she's gonna give half of her income in a day before taxes to making a trade to invest in. That's why people call it a scam. Because these brokers used to charge you all of your income just to make a trade, just to invest in your wealth. Now Robinhood came around and said, hey, everyone should be able to invest and afford to invest. There shouldn't be this huge barrier to invest in. And people are mad at that. So when all of this was going on, I just couldn't understand why people were so mad at Robinhood. I could understand. I could really understand, because people, they saw the big guy. Robinhood's the biggest one, right? There's Weibo, there's TD Ameritrade, but Robinhood's the millennial brokerage. That's their name, right? So they are the ones that get all the attention, good or bad, and usually bad, because the finance industry is shady. Robinhood's trying to work around that. I'm not a spokesman for Robinhood, so of course they do bad things. I'm not sure exactly what they do, but I do know that their business model allows people like me, who came up from poverty, to invest. And my mom, and my friends, and my cousins, who are also poor. We can all invest now. Of course, people took advantage of that and drove up some stocks price based on some hype around something that we're not going to get into right now, but we can talk about it later. And due to all of that, people were upset that Robinhood had to defend their business. They could not afford to keep that meme stock rally going, because it cost them money to run this business. They had to go raise, what, $1 billion, $3 billion overnight to survive. So yeah, Robinhood made some bad choices, or made some choices that are questionable. And I don't know how to explain that, because I don't know what they had to do exactly and why they had to do it. But all I know is that I am much happier paying a few cents due to regulations than paying $40 to make a single trade. We're doing much better now, thanks to Robinhood and the other millennial stock brokerages out there, driving this new paradigm of no commissions for trading, for investing, for your long-term wealth. This is a net good. There's no arguing it. It's objectively a net good. So let's go on. Let's finish this article. And Jem says, compare $30 plus 1.7% of the principal in commission, or $39 per trade minimum, with, that's minimum, $40 minimum, 71% of minimum wage, right? If you're, actually, let's do that math again. Let's do the math. So 7.25 times 8 hours in a day, 58. And we say 39 over 58 gives us 67% of your income if you're a minimum wage worker. You're not building wealth. You're going to stay minimum wage forever. You're going to stay poor forever. They kept you poor if you were poor. That's how it was built. So compare that with 23 cents in payment on a 100 share order that Robinhood earns. This is what Robinhood earns. This is not what you're charged. Robinhood got rid of charging. They got rid of commissions. Robinhood earns 23 cents in payment for a 100 share order on average. Charles Schwab used to earn $40 on this order, on this same order. $40 they used to charge their customers, plus 1.7% principal. So yeah, it's easy to see why there is no better time to be a retail investor. Robinhood active for customers when we change commissions forever, and will continue to push the industry on behalf of everyday people moving forward. Jim Stewart is the president and COO of Robinhood Securities. So Robinhood Securities is the clearinghouse of Robinhood. They run their own clearinghouse. Most brokerages don't do that, but Robinhood chose to. And that's part of the business model. They have to do what they got to do to make this business work, because there's very, very thin margins on this. So that's the article. And it explains to us all how this whole system works and why it's so much better than the days where Charles Schwab was eating good. They used to eat their red lobsters every night. They used to have their caviar every night. I've seen caviar. It doesn't look good. Doesn't taste, it doesn't smell good to me. And I believe it's just eggs, black eggs. They used to enjoy it. Delicacy. They used to charge $40. I think it costs $40 per 4 ounces of caviar. So they could afford a whole 4 ounces of caviar on one order from the rich guys back in the day, the guys you see on CNBC today, because they were charging $40 plus 1.7% principal of an order. That's how they made their money. So yeah, the big guys aren't very happy that there's more people out there winning. And so when these bad things happen, when all of this happens, they want to turn all of us against our own best interest. They want to make Robinhood look bad. But it's not bad. It's helping us. And Weibo as well. I don't want this to look like I'm trying to just be a mouthpiece for Robinhood, but this is how the whole industry works. This article is about the entire industry. It's not just Robinhood. They're trying to make it clear how the whole industry works. So if you use Weibo, if you use Robinhood or whatever else out there, TD Ameritrade, E-Trade, all of those guys do exactly this. And no longer do they charge commissions thanks to Robinhood. So that's the article. And I am very happy that I read this article by Jim Stewart, because that made it clear to me how this all works and why it's better than the current or the previous system that we're all in. Well, not us, because we're poor, right? We were poor and we couldn't afford to pay $40 per order. Even someone who is college educated might not make that much money per hour if they're working a corporate job. Well, not everyone in the corporate makes that much money. So even those people who have climbed up the ladder and worked hard, got a college education, took on all that debt, got a fancy job in the fancy offices in the fancy cities, couldn't afford to participate in the system. Only if you're rich, that's who they used to serve. Only the rich. And the rich got richer. Why? Because it costs money to participate in systems that are built to keep the poor out. Robinhood said, hey, come in. Come in. There's room for all of us now. So that's the video. I hope you enjoyed it. If you did, like the video below, subscribe to the channel, hit the notification bell. Comment your thoughts below on Robinhood, on Weibo, and on TD Ameritrade and Charles Schwab and all these guys, and how they all make their money, and how Robinhood has changed the game, and payment for order flow. And if you haven't seen my video previously on how Robinhood makes their money, then go check that video out, because they make lots of money thanks to the scale of this business model. They have found a good way to both make money and allow the average person to invest and build long-lasting sustainable wealth. And as you know, if you've been here for a while, we do that by practicing the bull mentality. The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term, because that's how we build wealth in this country. That's how we give ourselves the best chance of success on the stock market. So if you're not practicing the bull mentality, you might be burnt on these downturns that we've seen over the last few weeks in the market, where it goes down 10-20% in a few days and you lose thousands of dollars, and then you might panic and sell all your stocks because you're so worried about the short term. And you're forgetting that wealth takes time to build. So practice the bull mentality, take your time, stay patient, and build wealth that will be sustained for the long term and for hopefully long after you're gone, for the next generation. It takes time. Be patient. And of course, if you want to help this channel, want to support the channel financially and keep us going, because this is how we do it, then join us over at patreon.brokeracademy.org, where you'll get more access to me, get direct answers to investment questions, and be able to engage on our Discord channel where we share knowledge and discuss the stock market in real time every day of the market, and even on the weekends. So you have a community right there for you. And we share news and articles and rumors, so we can all get in early on new deals and collaborate on research and share our perspectives, unique perspectives. There's engineers, there's pilots, there's transit officers, and so many others from every walk of life, and we would love to have you join us. So if you're interested in all of that, then join us over at patreon.brokeracademy.org. I'm Lincoln with brokeracademy.org. Thank you again, and have a great day.